Mortgages are a valuable asset today, as well as the real estate. And I think you should look at it as, people should look at it as a good thing and talk to people like you, work out what's the best way around this. I've got extra cash. Should I pay my mortgage down to nil, or should I keep my mortgage in place and just put the money in an offset account? And because there's so many features of loans these days, it's ridiculous.
Yes.
Or should I just pay it down and use my redraw down the track if I need it? Or should I take this cash that I've got now and leave my mortgage in place because I can afford to pay it, go buy another property, and maybe the rent can pay that particular property.
Yeah.
And I think that a portfolio mindset is quite a powerful position. Don't be in a hurry, but at the same time, don't miss the boat.
No.
So set yourself a rhythm up. You might not be able to achieve the rhythm, like you said. It was every 2 years. That sounds a bit ambitious these days. But set yourself a rhythm and abide by the rhythm. Or trying to abide by the rhythm, but at the same time, don't. There's nothing wrong with being prepared to not meet the rhythm. Don't be disappointed.
Yeah, and it comes back to mindset, doesn't it? Is being a realist, but also having the mindset to say, well, I can overcome some obstacles. I might have to work a second job for a short period of time, and I don't have to buy the best things for the kids and those sort of things if I want this wealth creation on the other side. But I think going forward, liquidity is king. To be able to have cash at your disposal, and we've seen the last 18 months, you mentioned at the start of the show, you've so many interest rate rises. Who wished they would have saved more or kept more money aside now in 2023, wouldn't have thought about it maybe in 2021. All of a sudden, things have changed a lot. So I think we've got to stay really cash heavy, and the likes of the offset account really helps with that.
We hear this come out of the mouths of vendor agents, and we hear it come out of the mouths of buyers agents. And that is, it's a buyer's market or a vendor's market. What market are we in at the moment?
I'd probably correct them all and say markets within markets around the country, probably 12,000 markets. That's the complexity of real estate in Australia, just like the ETFs and shares. Generally speaking, you go to Perth, we're in absolutely a seller's market. It's hotcakes over there at the minute. Generally speaking, though, around the country, I think it's actually a balanced market. I think if you wanted to sell your home, there's enough buyers that will come along and buy it off you. There's no oversupply. The vacancy rates are extremely low. So I reckon it's pretty balanced, but I think that will change pretty soon, 2024.
Are you expecting the last rate rise that we had in November? Are you expecting that these rate rises, particularly the last one, will start to bite in at some stage?
They spoke about this mortgage cliff that really didn't occur, or we haven't seen it play out yet. I think people, generally speaking, are saying the rate rise was going to happen, but it's the end of the road for rate rises and it's going to normalise, and there's talks of interest rate reductions in the new years at some stage. So I think most people, again, it comes back to mindset, doesn't it? But most people are starting to see the light or the new norm that is. No doubt there's going to be some that didn't manage their money well that will be distressed and have to sell, but not to the proportion that I think the media talked it up to be.
And so on that basis, would you say that the Reserve Bank's done a fair job in terms of the rate rise regime and in order to try and achieve their dampening of inflation?
Is that a loaded gun?
No, not really. No, but I'd be interested to hear what you got to say.
Look,
a fair job. I don't mean a great job. They're never going to do a great job.
Okay, let's say a fair job. The thing that stumps me, and I'd like to ask you this question. It seems as though the government, the RBA's only response to curbing inflation is to lift interest rates.
That's correct. That is the current position, that the government relies on the Reserve Bank to do all the heavy lifting. But there have been occasions when governments, and I've experienced it myself with the Labor Party in the 80s, when the Labor Party actually introduced rebates for the interest you paid. It was means tested, but they introduced rebates of tax when you lodge your tax return June 30, if you had a mortgage and you earned under a certain amount of money, you got a rebate of tax that you paid. So they introduced fiscal policy initiatives to help people out who were getting hard hit by the high interest rates during that period. And it was actually a guy, his name was Frank Crean, not Simon Crean, but Frank Crean, for Simon's father, who actually introduced this legislation. It was during the not Whitlam period. It was during the Hawke period, and it was a great initiative. It was actually, and I was one of the people who actually, took it up. It was relieving because the Reserve Bank was trying to stop those people spending too much money who had too much money. I wasn't one of them, but it was unfair that I get affected by that because I wasn't spending too much money because I never had much money.
No.
So therefore, they gave us money back. So they're sort of taking from over here and refunding back here.
Yeah.
And so I think, therefore, to answer your question, John, I think the current government, the federal government, could do more to assist in making sure that monetary policy is not as blunt an instrument as it currently is. Because it's the people who were worried about inflation affecting actually the people who are being most affected by these interest rate increases. Yeah. And it just sounds counterintuitive to me.
And furthermore, the flow-on effect of that is people who are thinking about investing won't now because the holding costs are so much higher.
Yeah.
Like here's a radical idea. What if the RBA and lenders said, right, we're actually going to give you 1% lower to lend money if you're buying an investment property? How many more houses would be bought? How many more tenants would be allowed to live in homes instead of out on the street? And incentivizes investors to invest the way they should be, not penalise them by putting an extra 1% on their rate just because it's investor.
Yeah, we'll bring back the investor rate back to the owner-occupier rate.
At least.
Give them parity, which, by the way, did happen in one period there in the early 2000s period. Investors used to always pay more.
Yeah.
And then during that period, 2001, 2 or 3, that actually did happen, and then the investor market took off. It's funny that there's lots of different levers are being pushed and pulled out there. I mean, I had one the other day. I mean, in order to build more houses, you've got to get councils to agree to it. The reason councils don't agree to it, more density, is because they're going to get voted out. And that's what it all comes down to, popularity, and they don't like being unpopular.
No.
So, and if one person in one street, just one person in the street, objects loud enough, and is persistent and consistent enough with that objection, you're more than likely will stop a development happening in that street.
Yeah.
Because if there's nothing in it for them, they're never going to agree to it. So there's got to be something in it for everybody.
Yeah.